Hello, good morning to all. Welcome to today's daily dose of hi. Good morning to all. Welcome to today's daily dose of market insights, brought to you by OANDA, presented by myself, Kelvin Wong, the senior market analyst of OANDA Asia Pacific. So, very good morning to all for a brand new week ahead. So today will be 9th of October. All right. So before we start our presentation, let's take a look at the disclaimer slides first. Right? Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. And also, any forecast, prediction, or projection in this document is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, this will be our three key takeaway for our daily dose of market insights with a recap of key highlights and data that took shape on Friday and as well as the weekend. What are the next key data releases to watch out for, and as well as events to look up for this particular trading session, and as well as the short-term technical analysis outlook for the various asset classes that I will share with you all later that has started to exhibit pretty interesting technical configuration. So let's start off with a recap of events and data that took shape on Friday. So in fact, over on Friday and as well as the weekend, there's a lot of important data. So let's dissect it one step at a time. So let's start with the non-farm payrolls data first. All right. So let us focus more on the screen right now. All right. So over here, okay, let's focus more on the screen. So what we could see over here is that on Friday, we have a very strong US non-farm payroll data over here. As you can see my screen. Okay, let me expand my screen so you can see much better. Okay, good. So what you could see over here is that the non-farm payroll data came in way above expectation. So it added 336K jobs added instead of 170K. So that actually gave a bit of what I call a spook to the market in terms of the risk-off scenario, where right at the open of the US stock market session, all the major stock indicators gap down. But however, throughout the session over here is that the market actually rallied within the technical expectation. If those will recall on our earlier daily dose of market insights on the start of the week, we are potentially looking out for a potential short-term counter trend in the US benchmark stock indices, which actually took shape, and that counter trend rebound actually managed to come very close to the key short-term resistance level that we highlighted on Friday as well. So all in all, right, market seems to be shaking off this strong US non-farm payroll data number in a very short term, I would say. So the SPX actually ended with a positive 1.18%. The top performer will be Nasdaq 100 on Friday, up 1.7%. The Dow Jones Industrial Average up 0.87%. The Russell up 0.81%. So this is the headline number. So if you look at the other data over here, I'm going to share with you is the average hourly earnings. So actually, in fact, average hour earning was kind of lackluster. It dropped below expectation. It's dropped slightly below expectation at 4.2% year on year versus an expectation of 4.3%. So if you look at the trend of average hourly earnings over here, if I expand the chart, you'll be seeing that over here since the start of the year, it's been hovering around 4.4% on the average of 4.5% on the average. But the one that is on the later one September dropped below the year average at 4.5%. So that's a rather lackluster average hourly earnings year on year gain. That means, i.e., we start to see a bit of downside pressure on the wage growth, which indicating to us that the economic scenario in US is not so rosy. That means, i.e., we could potentially start to see it could be start to reflected during the earnings number as well, especially if you call for those who are actually watching the US stock market on this Friday. This is where the unofficial Q3 earnings session kickstart with the US bank. So let's talk more about that when we head towards Thursday on the US earnings session. Okay, then on top of this 4.2% year-on-year lackluster growth in average hourly earnings. So if you look at one particular sub-component, or I would say another component of the non-farm payroll data will be full-time employment. So non-farm payrolls data includes part-time employment as well. So full-time employment, if you look at the situation over here, in fact, since July over here, right, the employment number, full-time employment has been decreasing steadily to 13,000 for 134,000 plus. All right, in September, okay, from the high of from the year to date high of June. Okay, June peak. So from after June peak of about close to slightly below 135K, the US full-time employment has started to come down. So what it means that over here is that even though the non-farm payrolls data take up above expectation, pretty much rosy, but those are perhaps, right, what we're saying that non-farm employment also include part-time jobs. That means, i.e., we are looking at the US employment data, right? Employment situation right now is there are potentially people that are holding two or more jobs, given the fact that if that's a case scenario, it does also mean that consumer spending purchasing power has started to reduce. So the fact that why the US people need to or US labor force need to hold more than one job, given the fact that the full-time employment is dipping down, non-farm payrolls is ticking up. So i.e. it means that the higher cost of inflation has starts to eat into the pockets of consumers in US. So that definitely will not be so rosy in terms of economic growth as well, which could be reflected in the earnings potential or earnings growth or earnings guidance going forward in the reporting season, especially Q3 earnings reporting season that is due to kickstart unofficially on Friday. Okay, so that is the economic situations. But all in all, if you look at the current data right now, it's pretty much rosy. So definitely for sure, it's being led by the on Friday, it's being led by the led by the mega cap stocks that is actually outperforming the benchmark market. You could see over here pretty much clearly, Microsoft up 2.5%, Nvidia 2.4%, Amazon up 1.59%. The only one that is staying out of the outlier on the downside is almost unchanged is Tesla. But later I'll share with you one more particular index website you can look at. It's free called barchart.com. So you go to barchart.com. Under this stock sector here, you could actually look at the breakdown of the horizon. It's much more easier than the one but I showed you over here. This is the daily carpet. But if you look at the breakdown of 5 day, that means the last week, what we could see over here is that in fact the market breadth of the whole week of performance is rather lackluster, despite that even though we see a push up on Friday and Thursday on Friday. So that actually concluded, right? There's a high odds that whatever rally that we see in a 1.5 week ago is more like a counter trend rally. So you look at the last counter trend rally, we in a longer term or short term downtrend and medium term downtrend phases that is still in progress on the benchmark US stock indices. So you look at the S&P 500 index, the 11 sector breakdown. What we could see over here is that this is a 5-week weekly. That means take from Monday all the way up to Friday. Yes, even though Friday we see a stellar outperformance, but for the whole week is only this particular two sector, which is the comparison of the mega cap stocks, that is holding the fort. Communication sector plus 3%, and the information technology plus 2.94%. Then you have the defensive healthcare 0.94%. The rest of the 1, 2, 3, 4, 5, 6, 7, 8, 9. The rest of the 8 sector over here is all in the red. Okay, so not much of a rosy picture if you stretch it out for a longer term time period. If you look at the weekly performance of the 11 sector breakdown. Okay, so that's for the benchmark US stock market. Then what happened over in the FX market overnight? So FX market overnight, for sure, the dollar strength actually also eases as well after the initial rally. But what's interesting over here is that later I will share with you all the FX technical chart is that the dollar strength, yeah, even though start to ease, but however, it starts to actually come close to a near-term support level on certain FX pair. So then do not forget over here is that this on the FX market, it could be also be kind of a complicated on various FX pair, especially by this unfortunate event that took shape on over the weekend, where Israel actually declared, not operation, is a declared at war with Palestinian. So what I could see over here is that there was actually a very unfortunate bombing, serial bombing. So that could actually complicates the Middle East situation right now. And as you all know that in historically in the past, during this kind of key geopolitical risk premium on the rise, the first thing to look out for will be oil prices, given that oil is pretty much of a key we call it asset classes in the Middle East, and sometimes due to these geopolitical conflicts, certain elements in the Middle East continent may actually use oil as a weapon to actually gain bargaining power. So therefore, sure, oil actually gap up on today's Asia session, up 3%, and one of the safe haven asset that is benefiting from this geopolitical premium, risk premium will be gold. Gold actually gap up as well, close to about 2%, 2.5% in today's Asia session. So I'll share you about the gold chart very interestingly. Then, and what we could see over here is that pretty much a mixed picture on the FX market. So let me touch you on the FX market right now. Okay, let me open up the chart of the FX market. Okay, my apologies. Okay. Okay, so this is the movement of the 5-day rolling movement on the dollar against the rest of the major traded currency. So we could see over here, right? The dollar over here. Okay, this was the plunge. The dollar plunged down after the NFP ex post NFP data release, and right now over here during the Asia session, it's trying to actually recover as well. Okay, so dollar is trying to actually recover slowly due to the fact of this geopolitical risk premium. But what you could see over here is it didn't actually recover so much against the yen, against the dollar yen, and as well as against the European currency as well. All right, but dollar right now it seems to be recover against the Aussie, against the CNH, and against the Kiwi, and against Sing dollar. Okay, at this moment in time. So what I could see over here is that, but so far it didn't actually manage to actually go up close to this area, this region area over here. That means before the non-farm payroll data. So it's more like a, yes, it recovered slightly, but it's still trading within the range of last Friday, below last Friday high. All right. So now let's take a look at the FX market first, given the short term, we now talk about FX. So let's start to look at the short term technical outlook for the FX market. All right. So let us start off with the euro dollar first. So on the euro dollar, you still recall that previously on last Friday we do have a bullish bias short term counter trend rally condition holding on the support level at 1.0490. So this was actually the release of the non-farm payroll data, hit exactly at the support and start to bounce off. So what we could see over here is now coming very close to the short term resistance at 1.0630. So Friday printed a high of 1.06. Okay, so give or take, it's almost there already, and also coming close to that 20-day moving average that is sloping downwards. So overall, what we could see over here is that the RSI also starts to inch lower, shape lower high as well, based on from the current situation right now. So what we could see over here is that potentially, right, we may start to see more of a sideways movement on the euro dollar for today. For today, I'll have a neutral stance on the euro dollar between 1.0630 and 1.0490. Between these two levels, only a clear break below 1.4090, that means an hourly close below it, potentially you could start to see the new potential wave of an impulsive down leg within this short and medium term downtrend of the euro dollar that is still evolving since the high of this channel on 18th of July. So the next support level definitely to watch out for will be at 1.045 slash 1.042 in the short term. A break below 1.042 exposes towards the next support level at 1.020. All right, but however, if we start to see an hourly close above 1.0630, which is also breaking above the upper limit of this medium-term descending channel that I showed you all from the mid of July high this year, so that actually sees a further potential extension of this short-term counter trend rebound to test the next resistance at 1.0760. Okay, so that's for the euro dollar. So now, how about the sterling? So the sterling dollar, almost the same as the euro dollar, bounced off from the 121 figure key short-term pivotal support we have for last Friday to actually maintain that potential short-term counter trend rally. Counter trend rally potential resistance at 122.70 resistance almost been bent as well. printed a high on last Friday at 12261, so give or takes about 9 pips away. So, and also right below the downward sloping 20-day moving average. All right, so with that, we'll be having a neutral stance for today on the sterling dollar between 1.2270 and 1.2165. Only a clear breakdown and hourly close below 1.2165 will see a retest of 121 figure followed by 120.50, which was the last Wednesday, 4th August swing low area and 3rd October swing 3rd October and 4th October minor swing low area. Okay, but however, if we start to see an hourly clearance, hourly close above the 12270, then potentially we could see this extension of this short-term counter trend rally to actually inch up to test the next resistance level at 1.2355, which also confluence with the former minor swing low area of 20th of September turns into a minor pullback support and confluencing with this key medium-term descending channel upper limit that is in place since 14th of July high this year. All right, so all in all, flipping to a neutrality stance for the sterling dollar for today. Okay, lastly, very quickly on the dollar CAD. So dollar CAD could actually see further potential downside. Still recall on last Friday, we have a bearish bias on below 134.40 to look out for it to actually break below the 136.95, which it did, and now coming close to the support level at 136.10. So why do we have a bearish bias on last Friday? A quick recall is that because we start to see this short-term upside move from 29th of September all the way up to last Thursday swing high at 34.40. It's been showing lackluster upside momentum by this bearish divergence on the hourly chart, and also the reaction of this, the hitting of this 134.40 is not a short-term resistance, but it's a major resistance. If you go down to the daily chart over here that I show you all, so it's the major daily descending range resistance that kept previous up move since the high of 14th of October 2022. So this is a pretty much of a key significant higher level resistance level, and price action managed to react off this resistance. So potentially it could actually retrace now further towards the middle part of this descending ridge. So, but we're taking things one step at a time. So if you look at the hourly chart right now, it's still holding above that 20-day moving average. So for a short-term basis for today, we're actually still maintaining that short-term bearish bias condition on the dollar CAD. Using a much more tightened key short-term pivotal resistance for today at 136.95, which was last Friday minor swing low, now turns into a last Wednesday and last Friday's minor swing low broken down, now turns into a pullback resistance. So this will be my key short-term pivotal resistance for today at 136.95. No clear bullish divergence that is seen on the hourly RSI, so indicating to us that this downside momentum still remains intact. So a break below 136.10 potentially exposes the 20-day moving average, now acting as a resisted support level at 135.55 level. But however, if we start to see an hourly clearance with hourly close above 136.95, then you may start to see another round of choppy upward movement to retest the key medium term or major resistance level at 135.40. All right, and so do not mind, given the fact that dollar CAD tends to move indirectly with oil prices. So if oil prices starts to continue to inch up higher from here, potentially dollar CAD could actually see further downside as well, given its close intermarket indirect, given it close indirect intermarket correlation in the last 3 months or so. All right, so that's pretty much sum up for the FX market. So now let's very quickly take a look at the the WTI crude. All right, so for WTI crude over here is, let's start with the daily chart first. Okay, so this is West Texas oil. West Texas oil, you know, that's WTI crude in the futures market, but we call it West Texas oil in a platform. It's about tongue twisting. So today's Monday session, today's Monday HSI, you see a very strong and furious gap up, but this gap up over here now managed to stall at this former medium term range ascending channel support, now turns into a pullback resistance at around the 86 figure level. All right, so this is then the RSI is still below, haven't inched up above the 50 level yet at this point in time. So all in all, right, if you could look at now, this is the price action, it goes over here. But if you look at the hourly chart right now, if you go to the hourly chart at this point in time, okay, the RSI hit the overbought level okay, or whatever, but there is no signs of a clear bearish divergence yet. That means, i.e., right, this potential push up in price action may continue towards the 20-day moving average. So now it really clear past the 50-day moving average. Okay, so bear in mind that on this is the hourly chart, but on the hourly chart in trading view, we are able to overlay a higher time frame indicator on the hourly chart, like the moving average. So this is actually, this is not a 50 period, right? This is a 50-day moving average and a 20-day moving average. All right. So what you could see over here is now testing this pullback resistance at 86.45. uh all in all, right, is above the 50-day moving average, and potentially it could, given that the RSI, there's no clear signs of a bearish divergence yet. That means we could see a bit of residual push up towards the next resistance at 86.60, which is also coming close to the 20-day moving average as a resistance, as well as this if you take the from the last push down from 28th of September high, it's all come close to the 50% retracement as well. Okay, Fibo retracement. So all in all, right, we'll be using this morning's gap up here, okay, which was last Friday congestion gap up at 83.20 as my key short-term pivotal support level for today, to look out for this potential short-term bullish bias condition to test the next resistance at 88.60 level. But however, if we start to see hourly close or breakdown below 83.20, then this short-term bullish bias condition will be invalidated to see a squeeze down to test the next support level at 81.20 on the West Texas oil. All right, so now this West Texas oil. So very quickly, right, one more related one will be gold XAU. So if you look at gold XAU over here, very interestingly, after this bullish divergence that was flashed out on late last week over here at the 1810 support level. So what's 1810 support level? Is a pretty much key medium-term support level. If we go to the daily chart, what we could see over here is in fact this congestion zone here. Former swing high broke, turns into a pullback support that was tested on 27th of February, 8th of March, and right now it also hit down on the 5th of October and 4th of October last, right, and it start to form this bullish reversal candlestick pattern as well. All right, at this point in time on last Friday, okay, last Friday over here. So if we go to the hourly chart again, let's go back to the hourly chart. So what I could see over here is that price action has really gap up this morning, Asia session morning. So I'll be using this gap up now turns into a kind of a pullback support level at 80. This push up turns to a pullback support level at 1830. So 1830 will be my key short-term pivotal support level today. Yes, RSI is as an overbought level, so it may do a bit of minor pullback, but there's no bullish bearish pattern. There's no bearish divergence, clear bearish divergence on the overbought level on the hourly. So very unlike, there's the low odds of we start to see the start of another impulsive down move to retest the 1810 swing low level. So I'll be using, as long as 1830 key short-term pivotal support holds for today, potentially the XAU/USD, which is spot gold, could actually test the next resistance level at 1860, which is which is also the 38.2% Fibo retracement of this last push down from 21st of September all the way down to last Thursday swing low area. A break above it potentially sees the 50% retracement, which confluence with the minor swing high of 28th of September and 29th of September, all right, which is at 1880 resistance level. But however, if we start seeing hourly close below 1830, then this short-term counter trend bullish bias scenario short-term bullish bias scenario will be invalidated to see a retest at this key medium-term support level at 1810 for spot gold. All right, so that's pretty much sum up for the commodity market that is more or less kind of interrelated to this ongoing geopolitical risk premium that is on the rise due to the unfortunate event that was seen last week in the Middle Eastern region. So now let's immediately go down to the stock indices. Let's start with the US stock indices first. So for the US stock index, very quickly, last Friday, we still recall that the Dow Jones, we have this key short-term resistance level for that potential counter trend rally condition scenario. Rebound scenario been made. So what you could see over here is that we start to see a reversal price action on the candle, on the bearish reversal candle on the hourly chart. So with that bearish reversal candle on the hourly chart, what we could do over here is we'll be flipping to a bearish bias condition, and also using slightly above the 3510 level, which is 33,700 as my key short-term pivotal resistance for today, to flip into a bearish bias condition, also slightly below the 200-day moving average. So as long as this resistance is not surpassed, potentially the Dow Jones Industrial Average or the Wall Street, the 30, could actually to see a test on the next support level at 32,800 level. All right, but however, if we start to see hourly clearance, hourly close above 33,700, then this short-term counter trend rally condition will going to extend towards the next resistance level at 33,935/34,055, which also confluence with the 20-day moving average as well. Okay, now Nasdaq 100. So over here at the Nasdaq 100, we also have this 14,980 as my key short-term resistance for that potential short-term counter trend rally condition. So red counter trend rally has been made also at the right at the 20-day moving average before it actually shaped that bearish reversal push down seen during this Asia session. So we'll be flipping to a bearish bias condition for today, slightly above last Friday's swing high, which is at 15,140. So what's 15,140 is in fact this minor swing low area over here of 7th of September and 20th of September turns into a pullback resistance, also confluencing with the 50-day moving average acting as a resistance at 15,140. So 15,140 will be my key short-term pivotal resistance for today to actually flip, to have a flip to have a bearish bias short-term condition to test the next support level at 14,800. A breakdown below 14,800 potentially could expose to the key minor support of 28th of September and 4th of October at 14,440. 14,450. But however, if we start to see an hourly close above 15,140, then potentially this short-term counter trend rally could extend towards the next resistance level over here. Okay, let me highlight the next resistance level. So towards the next resistance level at this region here, okay, which is 15,355, which also confluence with this descending trend line that is in place since 19th of July high. All right, so now overall all in all flipping to a bearish bias condition for the Nasdaq 100 and the Dow Jones, the Wall Street 30, given the fact that their short-term counter trend rebound has already made their resistance on Friday. Okay, now over to the German 30 index very quickly. So for the German 30 index, very similar as well. The lower limit of that resistance has been made at 15,290. So we'll be using 15,330 as my key short-term pivotal resistance. So what's 15,330 is also this minor descending trend line in place since 15th of September swing high over here. So flipping to a short-term bearish bias condition as well, as long as 15,330 is not surpassed to the upside for today, looking for a potential retest at the swing low area of last week, which is at 15,020/14,930 level. However, if we start to see an hourly close or clearance with an hourly close above 15,330, then this short-term counter trend rally will extend to retest to test the next resistance level at 15,560. We're so close to the 200-day moving average, I think, as a resistance as well. Right now, very quickly, Asia. So for Asia over here, we start to see the Hang Seng Index or the Hong Kong 33 also hitting that short-term resistance level that we highlighted on last Friday, 17,680 level. Over here, the price action seems to be a bit of an exhaustion by shaping this unconvincing, we call it hourly candle at this point in time. So we'll be using and also very close to a 220-day moving average, as well as this descending trend line, minor descending trend line that is in place since 4th of September high. So I'll be using slightly the swing high area of last of 29th of September swing high, minor swing high, 17,910 as my key short-term pivotal resistance for today. And also, if you look at the RSI, seems to be shaping a bearish divergence, higher high but RSI showing lower high, all right, after hitting at a kind of a relatively high level of overbought level on Friday as well. So all in all, right, a bit of short-term bullish exhaustion on the price action that we see at this point in time. So that's why it actually gives us some kind of elements to advocate this potential short-term bearish bias condition. So 17,910 key short-term pivotal resistance, looking for a potential expose for a slide down towards the intermediate support level at 17,310, which was last Tuesday and Wednesday minor swing high, now turns into a pullback support level. A breakdown below 17,310 may expose us to the next support level at 17,060. But however, if we start to see a clearance above 17,910, then this short-term bearish bias correlation will be invalidated to see a test, to see a further push up of this short-term counter trend rally towards the next resistance at 18,300, which confluences with the 50-day moving average, and as well as this former minor range support turns into a pullback resistance level at 18,300 level as well. All right, so that's pretty much sum up with the short-term technical outlook for today. So what other key events to look out for will be definitely the event that is unfolding in the Middle East right now, which is kind of pretty much fluid. And also in terms of economic calendar, let's take a look at what are the things to look out for today. Okay, very quickly. Okay, so for today, in fact, is okay, let me start with this week, sorry. Yeah, so for today, it's a rather quiet session in terms of there's no key US economic data releases at this point in time. And also, yes, we have one European data releases will be at 2 p.m. Singapore time, which is German industrial production for August. And also during the US session, in terms of events wise, we have at Fed speak by two US Federal Reserve officials, Fed Logan speech at 9 p.m. and 9:15 p.m. Fed official Barr speech. Okay, so these are the key events and economic data to look out for on top of that ongoing fluid flow events that are taking shape right now in the Middle Eastern region. So with that, that pretty much sum up for today daily dose of market insight. We come to the 30-minute mark. So with that, thank you for your time and have a good day ahead, and we shall speak again tomorrow.